what do you think the macro environment is now and over the next 3 to 5 years? What do you see happening based on your experience and your view of that? Where do you think things are heading?
Well, I think a lot of us, in our professional careers kind of know one path, which is low inflow, stable inflation, and stocks are generally are going up quite well, and in particular over the last 15 years of uniquely stimulative monetary policy. And we've also learned that bonds are good diversifiers to stocks in that environment. But all of that is very predicated on a secular decline in inflation and stability. And I think we've really been, many investors have been shocked over the course of the last 18 months, finally recognizing that, low and stable inflation is not a given in this world. And certainly there are good macroeconomic reasons to think that the disinflationary dynamics that we've seen over the last 40 years are unlikely to persist in the future. A lot of those dynamics are reversing on a forward-looking basis. We had a time of peace versus a time of war. We had a time of global integration, and now we're having a time where globally we're pulling back from each other, right? We're creating nearshoring rather than international offshoring. Those sorts of dynamics are the things that created that low inflation that we got used to that are reversing. And so we're entering an environment of much higher inflation, and where a lot of the dynamics, the lessons learned, the rules of thumb that we've learned over the course of the last 40 years, those things are no longer going to work in the future. And so things like creating diversified portfolios, where you're considering what could happen if inflation is elevated for an extended period of time, I think are the key dynamics, the key things that investors need to start thinking about today in order to protect themselves from those environments. Because a growth slowdown, weak growth and weak economic activity, and falling stock prices isn't that bad if you can protect yourself again from that by holding bonds in your portfolio. That's basically what you've been able to do. The terrible outcome, the ruinous outcome for investors, is environments where inflation is elevated and asset returns are poor, and the value of your money is deteriorating. And that is a confluence of challenging conditions for investors and savers that we may be entering that we need to start to be prepared for.